All right, all right. We have a new week starting on the 15th of April. Okay, so I'm going to give you my pre-week analysis for this week. Um, as you know, over the weekend we had some volatility because of Iran's drone strikes against Israel. So far, nothing has escalated. It has kind of de-escalated a bit, but in these coming times, things could be getting quite volatile with all the global tensions. But anyway, let's see what the charts have to say. Okay, so I'll start off with the US dollar and cover some Forex major pairs. Okay, I won't be covering gold or silver at the moment, perhaps when I get a bit more organized. But currently, I'll give you my analysis starting from the yearly time frame down to the monthly and the weekly. At the moment, I won't go to the daily until I see something interesting. Okay, so yeah, let's look at the US dollar. This is the 12-month chart. 12-month is the yearly chart. So each candle is 1 year to be exact. Okay, so let's just see what happened in the past. There was a yearly unicorn gap created. Um, well, there was a previous yearly BISI that got blasted through. Price returned to it, expanded lower, creating a yearly SIBI with a intermediate term breaker. Price traded into it slightly in IOD IOFED, institutional order flow entry drill, and then started expanding lower. Started to consolidate over quite a number of years, and then expanded up, leaving another gap. Okay, there was another SIBI here as well, and one above. So price traded into that one, the one that was higher up here, and retraced down into this BISI, found support, and started expanding higher on the early time frame, creating more bullish fair value gaps, right? More BISIs, which is indicative of bullish order flow now. Bearish fair value gaps are getting disrespected, and bullish fair value gaps are holding price to move higher. So where's our target currently? On the yearly time frame, I would say above this swing high, right? This is the last premium array. Price already traded into this order block, came down and created a fair value gap on the yearly. Price could trade back into the yearly, but it doesn't have to. Has already traded on to some lower time frame PD arrays, which we'll go through now. Okay, 6 month. There's actually a 6-month gap in here with overlapping PD array up here in the form of this wick. So price traded into it, and then it looks like it's starting to expand higher now. I will definitely be keeping an eye if price comes down back into this yearly time frame in a sudden fashion. So going down to the 3-month time frame, same thing. There's this gap. Price came up, came down, did not break that low. 2 month, 1 month. Okay, so 1 month, there was a more refined gap here that price traded into almost all the way to the bottom of it. Expanded back up into this monthly time frame. Price already came into the monthly time frame and a monthly gap, retraced lower. Now it's back in here, retraced again with a CB with a balanced price range. Price traded into it, retraced, took out the previous month's low, and started expanding higher. So this was a consolidation, and that may have been the last manipulation move before we move higher and start using this as support to go towards this relative equal highs. It's a swing high, but there's a lot of price action that happened in here with relative equal highs, and I think with the sentiment that not the sentiment, but the bias I have that price would like to go higher for the dollar. That's a target for me. Okay, so first target would be obviously the swing high and the highs here. And, looking at other Forex major pairs, which I'll do in a second, it supports this bias as well. Okay, so it's going to be May soon, which is seasonally strong for the dollar. So we could see some rapid movements higher as well. Okay, so now I'll go down to the US dollar Swiss franc. I don't have anything on the higher time frames here, but let's go down 6 month, 3 month, 2 month, and 1 month. All right. So what happened there? Okay. The last move we had was price coming up, expanding down, taking out all these lows over here and into this large wick. I'm not sure if that's real data or just the broker doing some funny business. Okay, so for reference, only on the monthly time frame we have the reference of this gap. Price traded into it, traded down into the high of this previous month's candle and expanded higher, creating a immediate rebalance. So go down to 3 week, 2 week, 1 week. I think we just have to go into 1 week. Let's just see what happened. Price came up, traded into his weekly gap, came down, traded up again, came down, and now it's expanding higher, right? So we had the previous SIBI here, the liquidity that got taken out, a quick reversal, blasted right through that, found support in that, and also traded back into the BC here, and also the inversion fair value gap, traded higher. Like I said, price did not trade into this breakaway gap, but price came down all the way almost exactly to the high to create an immediate rebalance before expanding higher. Now expanded way above this monthly inversion fair value gap. Yep, so I'll be looking for higher prices. First target here, second target, these relatively equal highs, as well as a SIBI residing above here as well. Right, so those are nice targets in my opinion. First target obviously being here. To achieve this target, I'd probably be waiting on the daily time frame for 4-hour lowest for a entry into this area here. But this bullish sentiment coincides with the bullish sentiment on the dollar, right? So we'd be looking for bearish sentiments on other pairs. For yen, we also have somewhat of bullish sentiment that got already traded to. We had some relative equal highs here. Price came all the way down, expanded higher, and broke through those equal highs after quite a number of weeks. On the daily time frame, we can see how many times it has created those equal highs, and we blasted through that. So we should see a bit more momentum continuing higher as well. Besides that, I have no data on the left side to compare with. So let's go to the pound dollar. All right, let's just go straight down to the monthly time frame. See what happened. All right, so we had a SIBI up there that did not get traded to, which is fine because there's a SIBI down here with a nested PD arrays to the left. Price traded into it, traded down, traded up again, creating this balanced price range over here. But now we have price moving lower, and based on my bias of all the other pairs, I think we'd see this be used as support. Price come into a lower time frame PD array and then move lower. But let's just see if there's already a lower time frame PD array. Yeah. Okay, so we had a SIBI on the weekly started being created. So this is indicative of bullish order flow turning bearish order flow. Price traded into it one more time before expanding lower really fast on the CPI event. Okay, so with that much momentum, I believe that we'll be moving much lower. So we traded into this monthly balanced price range, previous CB. See an order block down here. So I expect some more fair value gaps to be created as we move lower. So it's a bit more clear on the euro. So let's go on the euro, which the pound would generally follow as well, quite correlated. This does have some price action on the yearly time frame. We saw a gap here, price trade into it, taking out a yearly high one more time before leaving, expanding low into this yearly gap, coming all the way up to this breaker body, right? But no gap created. Now I see we're expanding lower. Let's go to the 6 months. See, on the 6 month we have a gap, all right, and now we're expanding lower. See, is any other time frames? Okay, on the monthly, this is the six week gap. Some consolidation, one more high, one more fake manipulation to pull in traders, and now we move lower. There was a monthly balanced price range here. Price came all the way to it, closed in a doji. The next candle moved higher, taking out that previous month's low, but ultimately closing even lower. The next month expanded higher, and then CPI shot it all the way down past this balanced price range. So I'd be looking for price to possibly next month, price returning into this balanced price range and then expanding lower, and I'll be looking for lower time frame PD arrays. Target wise, we have this busy here and possibly even this low down into this gaps, and we'll see what happens. At this point, it's very far away. So on the 2 month, we've got these equal body lows. I look at equal lows for bodies as well, regardless of the wicks, because from my experience, it seems that those are also targeted by price as well. And you can check it out for yourself. You got some relative equal highs here. Price trades up into it. You can do your own research and have a look. So target would be, first target would be this busy down here. Relative equal lows here, this low over here, and ultimately, possibly going quite significantly lower. So, okay, let's go to the New Zealand dollar. 6 months, we got something on the yearly as well. We got a yearly gap here that didn't get traded into, but we got a 6 month gap that got traded into here and started expanding lower. We got some relatively equal lows here. Great. This is the first target, this swing low, and then these lows here. Ultimately, this low, and we don't have much data on the left. So at that point, we just have to look at lower time frame price action. Okay, going to the dollar CAD. Again, pair starting with dollar. We got bullish dollar, so dollar CAD should be bullish as well, right? Same thing. We've got a yearly gap here. Some trend line liquidity on lower time frame. We got some relative, pretty much equal highs up there. Very nice. Same thing as the New Zealand dollar. We had a 6 month gap that got traded into, and price expanded really fast towards the upside. So first target, this high, and these highs here. So could have some nice price action there, some nice trades. No more gaps on the monthly. So I'll be waiting for the weekly to show me more gaps. What we'll likely see is price come, maybe touch the trend line again, retrace, and then shoot up, or it could come above, maybe make a bit more equal highs, or even break it a bit, come down lower, and then possibly move higher, or just see support at this level here. That's something I'd be expecting and something I'd be looking for. Engineer more liquidity on these trend lines. First target above these highs, and then even higher after that. And we go on the Australian dollar. Nothing too much on the Australian dollar. We saw this weekly gap get traded into multiple times. There's an inversion fair value gap that could use as resistance, uh, resistance again, blasted right through it, came to this gap, got to use as resistance again, it closed even above it. So this inversion fair value gap isn't so useful, but price has been caught in that range. So now we're again in this monthly busy here. We traded up, but it looks like we're going to trade down and use it as possible resistance. Again, this range is quite big and there's not much information on the left, so I'll just be waiting for fair value gaps and PD arrays to be created on the lower time frame. I see some buy side liquidity up here, but I don't think price is ready to attack that just yet. However, anything can happen in these turbulent times. Price can shoot up and then shoot down again, or shoot down and then start shooting up. So just be careful with any of your positions. All right, so that's all. I'll do a review at the end of the week and see what happened in relation to price action. All right, see you guys later.